Hello all, this is Kirtana, Assistant Professor, Department of Commerce. Today we can see an lecture series on receipt and expenditure topic on the subject direct tax law and practice. So first we can see what is receipt. In direct tax, the term receipt refers to the inflow of money or benefits received by a person, business or organization during a financial year. These receipts can be taxable or non-taxable depending on the nature of the income and the provisions of the income tax. So in the image, check there. First is type of receipt, meaning and taxability. In revenue receipt, regular income from business, profession, salary, rent, interest all will be included. Usually it will be taxable under the income tax. In second type, capital receipt. So receipt from sale of capital asset like property, loan or capital introduced by owners. This all will be included, and mostly it will be not taxable except in the cases of capital gain only. And in the third type, taxable receipts. So any income specifically chargeable under Income Tax Act. So it will be taxable, for example, salary, business, profit, capital gains and all. So check whether the type of receipt and the meaning and the taxability. So in receipt we have inflows of money or a benefit received by a person or business or organization. Next is we can see what is expenditure. So in direct tax, expenditure refers to the amount of money spent by a person or a business for a various purposes. So it is usually the outflow of fund, and it is important to determine the taxable because certain expenditures are allowed as deductions while some are disallowed under the Income Tax Act. So actually in receipt, so we have seen in receipt it is inflow, and in expenditure it will be an outflow. So in this types of expenditure, meaning and tax treatment. So types of expenditure we have revenue expenditure, capital expenditure and allowable expenditure. So in revenue expenditure, it meaning includes expenses incurred for day-to-day operations like salary, rent, electricity, repairs, etc. The tax treatment followed will be allowed as deduction in the same year. So in capital expenditure, expenses incurred for acquiring or improving fixed asset like building, machineries, etc. So the tax treatment will be not deductible but eligible for depreciation benefits. And third one, allowable expenditure. So in allowable expenditure, expenses permitted under Income Tax Act only like professional fees, rent. So in tax treatment, it will be deducted from income to reduce the tax. So hope you have understood about receipt and the types and taxability, and expenditure and its types and tax treatment. So we can see actually this presentation will convey about concept of receipt and expenditure, which play a crucial role in effective financial management. We will define these terms, explore the types and discuss the strategies to accurate tracking and analysis of decision making. So first we can see the receipt. Definition of receipt is, so we have seen in prior, we can revise and documents confirming a transaction, detailing amount paid, date and purchase nature. So it will be included in importance like essentials for financial reporting, accuracy, tax deductions and effective budgeting. So we can see the expenditure understandable. Definition is, expenditure refers to the amount of money spent on goods and services. It is a key component of budgeting and financial planning, impacting savings and investment. So in types of expenditure, they are typically categorized as fixed and non-fixed and variable. So in these categories, finances will be effectively managed. So in impact of financial health, monitoring expenditure is vital for maintaining a healthy financial status. Excessive spending can lead to debt, while controlled expenditure promotes savings and investment opportunities. So in the previous slide we have seen the tracking of receipt and expenditure. So nowadays we have many tracking and traditional methods will have been cut down. So first is methods of tracking. Individuals can track their receipt expenditure through manual record keeping, spreadsheet or financial software. So if it is a digital solution, many apps, software solution automate the process of tracking receipt and expenditure. So in a technological world, we have many AI tool, many software development. So we have easy method of tracking our receipt and expenditure. So it will be the regular review and analysis, and expenditure patterns can provide insights into spending habits. So we can see what are the budgeting with receipt and expenditure. So budgeting is essential for financial management. By utilizing receipt, it is compulsory to create a budget, adjust the budget, and setting the financial goal. So creating the budget will also help to expected income and the expenditure. While adjusting the budget, we can analyze the receipt, how individuals focuses on particular areas for cost cutting. And in setting financial goals, will achieve the financial goals like savings for future uses. So while conclusion, understanding the receipt and expenditure is essential for effective management. So it encourages the systematic methods to track the receipt and expenditure using the AI tool, software, and many technological tools. So for the future conditions, stay informed about new tool and methods for managing finances. Hope the video was useful and understandable. Thank you for the listening.